Hey everyone, it's Rob Folia, Folia Properties at Keller Williams Realty here in Nashville, and wanted to come to you today to go over what the real estate market is doing in Middle Tennessee because it's August 1st, it's August, and you know what that means. It's time for our real estate market update video. So without further ado, let's jump in and look at some market stats. If you checked out what we were what we put out there last month in terms of July's the video in July, so basically June's market stats, you saw what was potentially an alarming trend that we saw in terms of inventory levels, and really wanted to dive in and take a look at that today and see how that's kind of corresponding with prices as well as with interest rates. And so actually, before we even look at these stats, let's just dive into interest rates. You can see they're still about where they were. They've gone up. Obviously, you can see this year. I mean, I'll put my cursor here at the beginning of the year. Low sixes, it didn't dip below six, but the 30-year fixed rates, blue line, had gotten into the low sixes, came up a little bit, and it's just been trending up and down like it always does. However, it's trending up again to this number being close to seven. And honestly, if you talk to a local mortgage officer, you're going to find that the number that they're quoting is going to be above seven. I mean, I haven't talked to a lender that's got a rate in the sixes here in a minute for 30-year fixed rate mortgages. And so just throwing that out there. So I'm not really sure exactly where Freddie Mac is coming up with this number. And yet the reality is rates have trended up a little bit this year. I mean, just take the low February 2nd, 6.09% to 6.81. I mean, that's almost 0.75%. That's a fair increase. Fair isn't pretty substantial. And so how has that impacted the market? Well, you can see right here, and I just picked a county. I mean, we can look at just about any county that's here in Middle Tennessee. However, I picked Rutherford County just because it's a county that's been growing over the last few years. There's a lot of development in Rutherford County, and yet it's also not the highest priced county either. It's the county where Murfreesboro is. It's a big county. Excuse me. However, it's not as big as Davidson. And so it gives us a really good sample size. It's not a small county where there's just a handful of homes that are selling, but it's also not the wealthiest county. It's just a good overall county for us to look at numbers. And you can see the median sales prices continue to trend up. I mean, 410 is what the number that was reported here for July of 23. You might see here on the right side that it's down 6.8% year over year. Because remember, that was last year around this time was kind of that peak of the market before the numbers started to come back down because of the rise in rates and because of just this insane, this explosion of prices that we saw last year. But at the same time, if you compare it to January of this year, 392 to 410, up $20,000. Quick mental math, that's 4 or 5% roughly from January to July. 6-month increase of 4 to 5%. That's a yearly increase of, let's just call it 8%. That's a steady increase that we're seeing in the market. So just something to be paying attention to, and just to see that prices are still going up. Yes, they're down year over year, and we expected that. Again, go back and look at any of my videos from earlier in the year when we were looking at, say, January. How January was an increase over last January. However, we were saying we'll start seeing a negative number because this rate of appreciation was unsustainable in that quarter two into quarter three of last year. And yet this growth right here is what we really need to be paying attention to. We're still seeing prices rise, just not at this insane explosion of last year. This is good appreciation. This is what we want to see. We want to see prices continue to go up a couple of percent, hopefully 5 to 8% every single year. It helps homeowners while kind of keeping growth manageable, I guess you could say. And so it's a number that makes sense. But the alarming number that I want to point out here is months of supply. So if you go back and look at the video we did in July with June stats, we were saying how typically a normal year, and take 2021 out of it, because 2021 was a low inventory year. A typical normal year is kind of what we saw in terms of 2022. You can see it's kind of like a bell curve, how it bottomed out at the beginning of the year, bottomed out again at the end of the year. You can see the same in 2020. Even if you go back pre-pandemic, let's just look at 2019. You see it's in a way a bell curve. It's while the valleys aren't even here, it goes up throughout the year, comes back down at the end. 2018, same thing. January, 2 months of supply. December 2.5. It went up throughout the year and it came back down. That's just a normal trend for months of supply, which is just inventory level compared to buyers. So typically we would be seeing, and again, here, let me just go back to the map so you can see. Typically, we'd be seeing April to May, June, July, August. That number is rising. Same here in 2019. That number is rising. We can even go back a little further before I look at this year's. You look at 2017, same thing. It's while it was kind of even, but it didn't drop all that much. Even 2.2 to 2 months, and then it still had that bell curve shape, is what I'm trying to say. Yet, if let's just jump back into here, the thing that's concerning to me looking at this is that what we saw in 2021, 2.9 months of supply in January. By the time we got to July, it was only 3.1, so it was basically flat all year, and then it just dropped off at the end of the year. You can see right here, 1 month of supply, 1.6 months of supply, 1.2 months. I mean, that's just insanely low inventory levels. What we saw, basically 20 months ago or so. January of this year, 2.8 months of supply. So you can see the trend line. We were starting to get back to, starting to creep our way closer to a balanced market. Well, 2.3 months of supply for July. 6 months later, it's dipped a half a month of supply compared to what it normally would be doing, and that's climbing. The reason why I'm concerned about this number, and the reason why I wanted to make this video today, is I wanted to share this could be showing us a trend line that gets us back to what we saw here at the end of 21 into 2020, the beginning of 22. Guys, the reality was this right here in 21 into 22 was the most extreme sellers market we ever saw. 20, 30, 40 offers on properties. Gosh, well, I didn't have any bigger than that number. I know one of my real estate friends from around the country, I think, had reported 80 offers on their listing, something along those lines. And my point is, that's not a healthy market. That's a market that created this, that saw this increase from November of 21, 365 to July of 22, 440. I mean, that's a 25% increase roughly, just within a couple of percentage points in less than a year. Like, that's not healthy. That's not a healthy market. That's a market that's concerning. We might be heading that direction. And if interest rates were low, I'd say that's great, because that would mean there's a lot of buyers where homes are going to be able to sell. Guys, with rates being this high, I think what we're going to start to see is kind of a desert of real estate, you could say. Meaning, a home's taking longer to sell just because there's fewer buyers, fewer people who need to move, and it just is what it is. If you're a home seller, my advice to you would be, take a look at what's out there and make your plan now. Know that it's probably not going to be, at least around here, a situation where we have 20 or 30 offers on your property unless interest rates drop again. Because the reality is, homes at these prices, 440 or 410, just take for Rutherford County, which again, that's an average county in our area. It's a nice county, and yet it's not it's not the most affluent county. Homes at that price at an 8% rate, 7% rate, if say they rise to 10%, that's just not affordable for a lot of homeowners and a lot of households. And so that just makes it to where it doesn't make sense to buy. We might see prices drop at that point. I know I'm rambling on some numbers here and talking hypotheticals, which I tend to try to avoid in these videos. And yet I would encourage everyone to make their decisions based on this market, meaning this market, it's still a seller's market. There's low inventory, and it's a double-edged sword. So if you need to make a move and you need to buy a home and sell, well, you got to find a place too in low inventory. But at the same time, if those places exist for you, and if it makes sense to make this move, then let's make that move now. Take advantage of the lack of inventory. In fact, let's just look at homes for sale. And this was another alarming number that I saw that concerned me. Rutherford County, down 22.5% year over year, 1,194 homes for sale. Compared to July of last year, 1,540. Again, typically we see a bell curve. Even in 21, you saw how it peaked here, April, May, June, then started to come back down. You can see here it was rising last year in June to July to August to September. It peaked in October of last year. Well, here, I mean, it's basically been flat all year, and now it's dropped substantially. And this is not just a Rutherford County trend, by the way. Davidson County, Nashville County, you can see the same thing. down 21% year over year. 3,157 homes for sale at the end of July. Compare that to July of last year, almost 4,000. Same thing, it peaked last year in October, then came down. It was flat. And while it went up a hair in April into May, in June, it just dropped substantially. New listings, you can see the same thing. New listings for last month in Davidson County down almost 40%. 1,125 homes hit the market last month in Davidson County. Compare that to July of last year, 1,859. I mean, gosh, that's almost half the amount of new homes that are coming out there for sale. We're going to be entering a market where there's just nothing out there for sale. Supply and demand, it's such an um, interesting topic in real estate, because I've gotten this question from friends, from clients before. They were like, how do I know how many people are interested in my house? And the reality is we don't know. We'll never know a certain, like, how many buyers are looking for a home. I don't care what sales pitch some real estate guru or expert wants to talk about with their system. The reality is that person does not know if I personally am looking to buy a home, or if my neighbor is, or my friend is. They don't know. But what we do know is we know half the equation of supply and demand. We know supply. We can look at things like homes for sale and see how that's tracking. We can look at things like new listings and see how that's tracking. So we know half the data, and then the other half is demand. How strong is demand? And since we don't know exactly how many people are looking in the market today at this very minute, what we can do is we can look at months of supply. And because months of supply, if you're not familiar with this stat, if maybe it's the first video of mine that you're seeing, months of supply just measures, if no other homes were to ever hit the market, how long would it take the real estate market to buy up everything that's out there, just based on how quickly they've been selling and how many homes are out there. 3.3 months of supply for Davidson County ending July of last year. Again, typically this number is kind of climbing or peaking around now. You can see last year, again, the best sellers market we ever saw, less than 2 months of supply at the beginning of the year, climbed up to 3.4 months of supply, peaked in November, came down while it was climbing a little bit this year. This substantial drop, man, that's a warning sign that we're heading back to this. I mean, because typically, again, it doesn't really drop like that until you get to November into December, the holidays, nobody's moving, that type of thing. Like, this drop is substantial, and I just expect us to continue to see that. I'd be surprised if we came into August, September, October, and all of a sudden there was a flood of homes for sale. That just doesn't typically happen unless there's some sort of economic event that happens in our world that causes the real estate market to shift in a way that we're not expecting. And so, point being, if you're a homeowner that's out there, again, take advantage of the conditions that we're in right now. If things make sense for you, meaning, say you need to get a mortgage on your next home, if that payment at this 6.81%, whatever it is that you're getting from your lender, if that makes sense for your budget, take advantage of the market, because it's a low inventory market. It's a good time to be doing this stuff. And yet, no, it's a low inventory market on the buy side too. If you're a home buyer, if you're thinking maybe you're looking to buy a first home, maybe you're renting right now, maybe you're an investor thinking about investing in real estate. Again, just look at this number, get clarity from your mortgage officer in terms of, does that payment make sense for your life? And just know that we're gonna have a limited market out there in terms of the amount of homes for sale. I mean, again, you can see that right here. When we're seeing a negative trend of down 21% in terms of the amount of homes that are out there, we're seeing a negative trend of down 40% in terms of new listings. And I don't think I even looked at that in Rutherford. Let's just look at Rutherford real quick before we end. You can see, again, it's not just a Davidson trend. I mean, down 35.5%. Here, I'll just pull up another county or two, just out of curiosity. Williamson County, down almost 26%. Let's look at Wilson County real quick, down almost 35%. It's just that negative trend in terms of new listings. That's going to be a leading indicator for us to know what happens in the market in 3 months and 6 months, because the homes that don't sell typically in a heartbeat, they're going to be out there still. But if there's nothing that hit in July, that's going to still be out there in August or September or October, then guys, it just means it's just going to be a market where less homes, meaning less months of supply, meaning a stronger seller's market. So if you're looking to buy a home, take advantage of what's out there right now, because it does not look like there's going to be a surplus of supply that gets out there. And it's an interesting market that we're in, just to say the least. I'll probably cut the video off right here, but if there's anything y'all need, as always, reach out. I'm here to help and be of service. If you're curious about your specific example, meaning say I didn't go over your county and you're curious, well, hey, how's my county doing right now? If you're getting this in your email, hit reply. If you're not getting this in your email, seeing it on social media or on YouTube, just drop me a line, rob@foliaproperties.com. I'll put my shirt up so you can see how to spell my name, but Rob, ROB, at FOGLIA properties.com. Happy to be of service and help y'all in any way that I can. Until next time, y'all, I appreciate y'all. Thanks so much.